Do's and don'ts when buying a home. Mike and Sarah Craven are excited to be closing escrow in 2 weeks on their first home. Their loan has been approved. They've given their apartment notice. They're all packed. The money Sarah's grandmother promised her for the down payment has already hit her account, and everything seems set. On the Wednesday before closing, Sarah's daughter Judy gets in a car wreck, and the vehicle is totaled. Like many parents would, that weekend, the Cravens take Judy to a used car dealership and help finance a replacement car for Judy. After all, Judy's in college and drives an hour every day to get there. A car is a necessity. The following week, the Cravens' loan docs arrive at the settlement agent's office and loan docs are signed. As is customary on conventional loans, the lender repulls a credit report right before funding. And to the loan officer's shock, a new $560 per month car payment appears. Despite the Cravens' pleas, the underwriter is unable to eliminate the new debt because there's no history of a third party making the payments. The recalculated debt ratio is found to be over the lender's acceptable limit and the loan docs are canceled. The Cravens' loan is declined. And all of this could have been avoided if they had discussed with their loan officer ahead of time the effects of co-signing on someone else's loan. Don't co-sign for someone else without discussing the effects with your lender first. Just like most homebuyers, the Cravens mistakenly assumed that proving their daughter was going to make the payments on that new car would be good enough. Truth is, unless there's a solid 12-month or longer history of the third party making the payments via canceled checks, the new payment can't be eliminated. There are many things you should avoid before and during your home purchase. Here are some things not to do when buying a home. Don't make cash deposits into your bank, and don't move money around from account to account. Significant delays can happen during the loan process if the money you're planning to bring to closing cannot be properly sourced. Sourced means the underwriter can paper trail the money to its origin, and it's an acceptable source. For this reason, cash is typically unacceptable, so keep from making cash deposits into any account. In addition, moving money from account to account can become a tedious thing for the underwriter to satisfactorily track. Needless to say, don't open and close accounts either. Don't make sudden large purchases on credit. The most common purchase homebuyers make in the middle of the settlement process is a new set of furniture. This can be tempting as you arrange the living room, dining room, and bedroom in your mind. But a new account on your credit report can drop your score and throw off your debt ratio, sending your loan into a spin. Don't allow new credit inquiries prior to closing. Your credit score is sensitive to inquiries, and with the new pattern of lenders repulling your credit report right before closing, a drop in your score could cause problems on your loan. Homebuyers sometimes decide to shop their home mortgage all over town, allowing their credit report to be pulled by multiple lenders. This also can cause a drop in your score. Don't plan a vacation to be taken during your home purchase. It's not wise to be inaccessible when your real estate agent and lender will frequently have decisions for you to make and documents that need to be signed, leading all the way up to closing. Time differences associated with some travel and no access to fax or email can delay your settlement process. On transactions involving for sale by owner, don't give your good faith earnest deposit directly to the seller. Always use a settlement agent like an escrow agent or closing attorney. Sellers, especially those not savvy about real estate transactions, may spend the money before closing. If closing were to be canceled for any number of reasons, you'd have a hard time getting your money back. Don't miss payments or fall behind on bills. As silly as this sounds, homebuyers get so caught up in the stress of the home buying process that they overlook certain payments. Even a $10 missed credit card payment, which creates a 30-day late entry on your credit report, can be disastrous. Don't divulge your personal financial situation to the seller or the seller's real estate agent. The old saying, "Anything you say can be used against you," is very real in this arena. Don't put down your good faith earnest deposit using cash turned into a money order or with a check written from an account your lender hasn't verified. Earnest deposit money is counted towards your total funds needed to close, and all of it needs to be sourced by your lender. If the seller or the seller's real estate agent asks for proof of funds, for example, proof that you have sufficient funds for down payment, Make sure you block out at least a portion of your account number on your bank statement before transmitting to the seller. You never know who else could get their hands on such sensitive documents. Don't think you can take out cash advances on credit cards to cover down payment or closing costs. Such cash is an unacceptable form of funds to close. Don't forget to call and schedule utilities to be turned on in time for your move-in. Once your settlement date is scheduled and the deal is about to close, be sure to allow yourself enough time for the phone company and electric company, for example, to set up new service. It usually doesn't happen overnight. Moving in the middle of summer to a home that doesn't have cool air turned on will be uncomfortable. Don't throw away financial documents such as bank statements, paycheck stubs, etc. Your lender will definitely want the most up-to-date of any document you provide. Good examples are the most recent quarterly retirement account statement, the most recent bank statement, most recent paycheck stub, most recent child support check received, etc. Don't change jobs or careers during your home purchase. If you leave one job and take on a new one, your lender may have difficulty predicting future earnings. Going from being a wage earner who receives a regular paycheck stub to a startup business owner will also give your loan application the kiss of death. Also, if you are a wage earner that receives a regular paycheck stub, keep an eye on what your tax preparer files for unreimbursed employee expenses on Schedule A of your tax returns. Lenders deduct, dollar for dollar from your gross income, the amount you write off. This obviously lowers your income and increases your debt ratio on paper. Don't lend money out you may need for down payment or closing costs. Documenting money properly when it's paid back to you can be tricky. Many a cousin may have a dire need pop up right as you are about to enter into escrow. Resist the temptation to be the hero, and if at all possible, wait until you've got the keys to your new home. Don't forget to file your tax returns. Not just that, but file on time. If you're purchasing your home between January and April, a lender may or may not ask for the latest year's tax returns to be filed and then be verified using a standard form known as the 4506T. The problem is, the Internal Revenue Service doesn't always register the figures in their system in a timely manner, which can bring your loan process to a grinding halt. Ask your lender early in the process if they will require the latest tax return to be filed. Don't forget to plan for the last month's rent at the place you're leaving. Remember, if you are presently renting, you shouldn't just break the lease without notice. If your home loan transaction does not close exactly on time, there is a chance you may need to pay a whole new month's rent, or at least a portion. Be prepared. Discuss this with your landlord rather than be caught unaware and unprepared. Your landlord will be more inclined to work with you if you plan ahead. Things to do when buying a home. Do assemble all your pertinent documents into one place as you apply for a home loan. There are a myriad of different documents your lender could ask for, including tax returns, paycheck stubs, bank statements, retirement account statements, proof of surrender value of life insurance, copy of Social Security card, child support court order, divorce decree, bankruptcy papers, gift letter, canceled checks, supporting documents for causes of past credit problems, and more. Waiting until you've entered into escrow is not a good time to begin trying to find these items. Do make sure you have an up-to-date photo ID, such as, for example, a driver's license or passport. If your driver's license expires in the middle of the escrow settlement process, you may run into a snag. You won't be able to sign closing documents in front of a notary without proper photo identification. If possible, do invest in a small scanner to hook up to your computer. You may find yourself frequently sending documents to your lender, real estate agent, and settlement officer. Scanning, then emailing is the preferred method amongst everyone. If you don't have an email address, do get a free email account at Juno, Yahoo, Hotmail, or Gmail, for example, so you can receive important documents. Some agents and lenders can even accept electronic signatures, which make it much more convenient for all parties involved. Your ability to receive and return important documents can have a big bearing on how smoothly your settlement process goes. Do get a free copy of your credit report from annualcreditreport.com when you begin to think about owning your own home. Review it for errors and inaccuracies. Watch our other video tutorial on dealing with your credit report. Do make sure you conduct a final walkthrough. This is normally done very close to the end of the settlement process and is done to make sure the condition of the home you are buying is essentially the same as when you first placed your offer to purchase it. If, for example, ceiling fans and a kitchen sink have been removed, then you need to discuss with your agent what to do next. Do prepare and watch out for early withdrawal penalties, or charges if you take money out of stocks or retirement plan like a 401k or IRA for your down payment. Do consider getting a family member to co-sign with you. If some of your income is hard to document or too new to use, but you feel you can afford a higher mortgage payment, you may want to consider an FHA loan that allows for co-borrowers who don't have to occupy the property. The income from these non-occupant co-borrowers can be blended with yours, thus increasing your buying power. Do know and understand all the ways you can hold title in your state. For example, joint tenants with right of survivorship and tenants in common have very different implications. Discuss with your title officer or settlement agent depending on which state you're buying in. If you are planning on receiving gift money towards the purchase of the home from a family member, for example, do let the donor of the gift know ahead of time that a copy of their bank statement will be required to satisfactorily document the source of the gift money they make to you. Some donors are uncomfortable with this and may benefit from a conversation with your loan officer to assure them of the privacy laws under which lenders operate. Do explore down payment grant and assistance programs. Several city, county, and state agencies have some form of down payment grant or assistance. In some cases, this can amount to as much as 20% of the purchase price of your home. It would be a tragedy not to explore these options before you decide how much home you can afford. Do get home buyer counseling even if not required by your lender. Home buyer counseling courses are offered by various government agencies for free. You can't go wrong by taking them. The material will make you think of something you didn't think of, and prepare you that much more for the home buying process and your new home. Do consider a duplex even if you're looking for a single-family home. If your family is not too big, you may want to consider buying a duplex. For spending almost half the dollar per square footage of total living space, you can rent the other half out and possibly pay for your entire mortgage or most of it. Some neighborhoods and cities are plentiful in duplexes, whereas others aren't. You do lose a little bit of privacy, but you make huge gains economically speaking. Thank you for watching, and be sure to contact the featured real estate professional who provided you with this informative video tutorial.